Hello ladies and gentlemen, this is your teacher Usman Ali and the video is regarding the solution of the exercise 5-6. Now if you see here, a balance sheet is given to us as of 31st July 2014 and we are required to correct the balance sheet actually. So there are some mistakes that we expect, so we're gonna actually overcome those mistakes. Now remember, there are two objectives. One is actually to bring those corrections or adjustments actually to the accounts shown to us or given to us in the balance sheet, and second is we will work on the complete classification or the presentation of the accounts inside a balance sheet also. So we're gonna work like in two dimensions. Okay, so you know these names, they are not unique for you, you're familiar with all of these names, so let's skip this part. Now the following information is given to us actually on this balance sheet. Cash, we had a balance of $69,000 and cash includes 1200 in petty cash funds. It means that inside this $69,000, $1200 is actually present, and the cause or the source of that is petty cash. So this is correct. As per the rules, petty cash should be added to the cash, so there is no issue in this thing. Cash includes 1200 in petty cash funds, no problem. Further it says, and $15,000 in bond sinking fund, means there is a bond sinking fund of $15,000 and that money is also added into or inside this $69,000. Now there is a problem here. If you remember our PPT chapter discussion, we discussed what are sinking funds. Sinking funds are actually written inside the long-term assets of a company, and sinking fund is that money which is available, which is your money, but it is not available spontaneously to be used for any kind of bills or any emergencies actually. So it's my money, but I cannot use it for time being due to its restriction. So it means restricted cash technically cannot be written inside this net value of 69,000. We need to take out this $15,000 from $69,000. It means an adjusted of cash is needed here. What is the balance of cash? 69,000. So I have prepared an Excel sheet here. My objective is actually to calculate the adjusted cash value. But what is my unadjusted value given to me in the numerical? 69,000. So I will shift the unadjusted value here, $69,000 here. Okay, that's the value. Now what adjustment is needed? The adjustment of $15,000 bond sinking fund is needed. This money should not be present inside 69. It should not be, shouldn't be. So if it shouldn't be, then the adjustment will be that I will subtract this 15,000 from the 69. If I do subtract it, that's it. The life is simple. The adjustment will be made. Okay, so this is the adjustment of the first information. Number two, the net account receivables balance is comprised of the following two items. This 40,500 actually. This comprises of the two items. One, account receivable of $44,000. And the second is allowance for doubtful account of $3,500 actually. So if you do the calculation in your calculator as well, 44,000 minus 3,500, it gives you a net value of 40,500. From our chapter discussion, we have learned this thing that account receivables should be the amount of account receivable and the allowance, both of them should be shown actually in the sub columns. So remember this thing, we will adjust that when we are actually preparing the balance sheet of the company. Just remember this adjustment. By the way, what is the balance of account receivable here? $44,000 actually. So I will shift it because I need it in my coming part of the numerical. So I will shift the balance of $44,000 here. Okay, and just for your reminder, we had a balance of 44,000 and we had an allowance of doubtful account of 3,500 actually. Okay, so if this allowance for doubtful account, by nature it is in minus, so if I subtract 3,500 from 44,000, I get a net value of 40,500. Just remember this thing, okay, in case if it's just this thing, how to calculate 40,500. Okay, let's go to the third one. Inventory costing 5,300 was shipped out on consignment on July 31st 2014. Okay, so we got inventory and we shipped it out, means we sent it, okay, on consignment to a consignee. Okay, so we are the people who are sending the inventory. This is my product, my company's product, and I have just signed a contract with a consignee agent, and the consignee agent is actually responsible to sell the product on my behalf against commission. So if I'm sending $5,300 worth of inventory, technically, ladies and gentlemen, uh, if I'm sending this money to the consignee, it does not mean my inventory book in my books of accounts, my inventory will go down. Actually, the accounting procedure of the consignment account is like this, that if I have sent it to Mr. Ahmad, who is my consignee, so I will open an account, consignee account by the name of Ahmad inside my books of accounts, and I will shift the worth of this inventory $5,300 to the consignee account, but still it should be shown in the what you can say in the final inventory figure of my company. It's not subtracted, because when Ahmad, the consignee, receives the inventory, so as he's not the owner of the inventory, so he will not record the inventory in his books of accounts. Actually, remember this point, okay? And he will only sell the inventory, and once sold, will take the commission, and the remaining money will be sent to me. When the remaining money is sent to me, then I will say, okay, sales is made, and I will reduce the inventory balance actually. So remember this thing, okay? This is the story of the consignment. Now it says that the ending inventory balance does not include the consigned goods. What is my ending balance? Inventory $60,000. It says, or it claims that inside this $60,000, this $5,300 amount is not present, which is wrong, which is against the statement a minute before. I just said that when I send the inventory to a consignee, it does not mean I will reduce the inventory balance. It's just I will shift that inventory value to a consignee account only for record purpose. Okay, just to track that how much inventory is sent to which consignee agent actually. Okay, so this is wrong. This 5,300 should be present inside this inventory balance of 6,000. It means this 60,000, not 6,000, sorry, 60,000. It means this needs adjustment. Inventory needs adjustment. Okay, so what is the balance? 60,000. I will shift this inventory balance here, 60,000. This is the unadjusted, sorry, not 6,000, 60,000. And this 60,000 needs adjustment. What type of adjustment? This 5,300 should be added into this 60,000. Okay, I give you the reason why. So added, should be added means I will plus this 5,300 into my inventory balance. Okay, I hope you got this point also. Now, further it says, so receivable in the amount of 5,300 were recognized on the consigned good as well, mistakenly. Okay, as this was mistakenly, when you send $5,300 worth of inventory to the consignee agent, ladies and gentlemen, the consignee agent will only receive it and sell it. The consignee agent do not accept it as inventory. Earlier I just discussed it. Okay, so just like you cannot reduce the inventory, okay, from this $60,000, you cannot reduce it. Okay, and this is the reason I plussed it, because I cannot reduce it. I need to keep it inside the inventory balance. Just like if I cannot reduce the inventory balance, also I cannot record it as my receivable, because sending inventory to consignee does not mean I sold my product. No, it just means I gave it to the agent and he will sell it, and then it will be my sales. So this 5,300 receivable, which is inside the value of account receivable, this should be taken out, means they should be reversed. Okay, so I will take it out from the account receivable balance. Take it out means minus 5,300. Okay, ladies and gentlemen, so remember this point. Then let's proceed to the fourth point. Equipment had a cost of $1,12,000 and the accumulated depreciation of 28,000. So it's no reversal is needed here. It's just a better representation of the accounts should be done in the balance sheet. Okay, so in order to save the time and the MB size, I have already prepared an empty format of a balance sheet for ourselves. Okay, We have current assets section, current liability section, long-term assets, long-term liabilities. Then inside long-term assets, we have long-term investment, property, plant and equipment, intangible assets. So these are all discussed in the chapter, if you remember. We have the equity side. So I have made all these arrangements here, okay? Now, if I want to shift this information 4 into the balance sheet, it says equipment has a cost of $1,12,000. So what is equipment? Equipment comes under the category of property, plant and equipment here, okay? So I will simply write here equipment. Okay, what is the cost of the equipment? $1,12,000 was the cost of the equipment, okay? And further it says an accumulated depreciation of $28,000. So I will write here accumulated depreciation minus how much? $28,000. Okay, so if I subtract this 28,000, or why don't I do it in the parenthesis actually? Okay, that's in the sub column. Oh, that's again converted into minus. Okay, so 1,12,000 minus 28,000, it gives me $84,000 balance. Okay, and if you see here, equipment net 84,000 was also given in the numerical. It's just that we had to present it in a little different manner. Okay, then let's proceed. Let's go to the last information given to us. Income tax payable of $6,000 was accrued on July 31st. So today is 31st July and we have closed our books of accounts. We have generated an income, and based on that we need to pay $6,000 tax. So it's accrued on July 31st. The money is not paid probably, okay, because on the same day we don't pay the money. We pay money like in some days actually. Here the company, however, had set up a cash funds to meet this obligation. So let's clarify it, that okay, so the tax liability is created, $6,000, but the money is not paid. Why? Because the company had set up a cash fund to meet its obligation. It means in simple words that the company had put aside $6,000, that okay, this is the money and I will pay to the government very soon, or very, very soon. Arrangement is made, okay? This cash fund was not included in the cash balance but was offset against the income tax payable amount. So this cash fund was not included in the cash balance. It means that this money, $6,000, which is present with me, and it is right now it's present, and right away I am planning in, let's say, a couple of days to pay it by the name of tax to the government. This money is not added into this cash balance of $69,000, which is wrong, because it's not a restricted cash. It's just I had a money and I had to pay the tax bill. It is for the use. This $15,000 has a different use, ladies and gentlemen. Remember this thing. This $15,000 is a bond sinking fund. Bond has a longer life. It is a long-term investment, and it will be not used spontaneously. It will take some time and then it will be used actually. By the way, if I want to shift this bond sinking fund of $15,000, I will write it here in the long-term investment, bond sinking fund. And what is the amount of bond sinking fund? $15,000. Okay, it will be actually written here. Okay, so let's go back to our $6,000 discussion. So we were discussing this thing, that $6,000 of this money which is available, and right away I'm going to pay that to the tax authorities in some days, couple of days. This is not present inside my cash balance, so it means I should make it present. I should make it present means I should add it actually. So I will go to the adjustment sheet and I will add this $6,000 to the cash balance in order to make this thing adjusted. Okay, so that's the adjustment which is actually needed. So the cash fund was not included in the cash balance. It was not included. Now I have included it. I have plussed it, but was offset against the income tax payable amount. So that adjustment is actually done, means the offsetting of the or accepting this thing as your tax liability is already actually made, but mistakenly not written inside here. We will write here, what is this? Income tax payable, income tax liability, and I am planning to pay it in coming days. So that's my current liability. Okay, so what I will do is I will actually write it inside the current liability section by the name of tax payable. How much is my tax payable? $6,000. Okay, so this is my adjustments, my sum of the transactions actually needed. Those accounts which you see here, if they are not being affected by the information given to us, so that's it. We don't need to actually do any changes here, just like patents here, $21,000. Okay, so let's start doing or filling up the balance sheet one by one, and then you will see. Okay, so what I will do now, I was having a cash balance of $69,000, but now I made some adjustments to cash. So what will be my new balance or adjusted balance of cash? For that I will plus whatever I have. So that's it, I have plussed it. Likewise, I will plus the account receivable also, and I gonna plus the adjusted inventory or adjustments of the inventory also here. Okay, so my adjusted cash balance is 60,000. I will shift this $60,000 to the balance sheet. Then what is the value of my account receivable? So account receivable adjusted value is 38,500. The sum of it, previously it was 44, but now it is 38,700. I will shift it 38,700. Then what is my allowance for doubtful account? My allowance for doubtful account was $3,500. So I will shift it here minus 3,500, because allowance for doubtful account should be subtracted from the receivable. So it's 38,700 minus 3,500. We will get $35,200 net value for account receivable. Then our previous or unadjusted inventory was $60,000. Okay, now our inventory adjusted inventory value is 65,300. So I will shift this value here also, 65,300. Okay, and that's it. We do not have any information which is related to current assets, so I'm gonna plus it. So the total current assets we have is 1,60,500. Let's move forward to the long-term assets. Actually, in the long-term assets we have long-term investment, and the only long-term investment that we have is bond sinking fund. Okay, so that is my total. Okay, I would call it as the total of bond, okay, sinking fund. Okay, just for a better presentation. Okay, so this is the total of it. Then I will move towards the property, plant and equipment. Let me even shade it a bit different, so that you can have an idea that these are actually three subsections inside the long-term asset sections. Okay, so we got equipment 84,000. We got a total value of that, so we can calculate the total of property, plant and equipment. Okay, the total is again 84,000. It will be shifted down here. Okay, and that's the total of it. Then what do we have inside the intangible assets? So cash is done, account receivable is done, inventory is done, equipment is done, patents are remaining. Patent is an intangible asset worth $21,000, and there is no information given to us on the patent, which means patent remain same. Okay, so patents were actually how much? $21,000. So we will keep it as it is. Okay, and then we got the total of intangible assets. So I'm writing in short, okay, just for better time management, and there is a mistake, it's 21,000. Okay, so this will be my total of the intangible assets. Okay, now total assets are what? Total assets is the total of current assets and the total of long-term assets. So let's calculate the total of long-term assets here. Okay, so the total of the long asset is what? The total of the long asset is the total of the long-term investment, okay, plus the total of the property, plant and equipment, plus the total of the intangible assets. So we get our long-term investments of $1,20,000. Okay, I will highlight it a bit. Okay, yes, this is fine. So this is my total of the long-term in assets actually. So what will be the total of asset? The total of the asset would be total of the current liability plus the total of the long-term assets, and my total assets are 2,80,500. Okay, so let's go to the current liability side now. In the current liability, what do we have? Notes and account payable. So it's not account payable only, it's notes and account payable. Okay, so what was the value of notes and account payable? 44,000, and we do not have any information on notes payable and account payable, so it will remain 44,000 unchanged. And then you do know that from where $6,000 tax liability came. Other than that, we did not had any current liability, so that's it. We can find the total of the current liability, which is $50,000. Then long-term liabilities, let's see if we have any long-term liability. In the long-term liabilities, we had $75,000. So I will directly write here long-term liabilities. Okay, and that's how much? $75,000. Okay, so I will write this one here, and then I will calculate the total of long-term liability. So the total of the long-term liability will be 75,000 in total. I can bold it a bit. Okay, so we have the total of current and we have the total of long-term. So that's it. We can plus it to calculate what? To calculate the total of the liability. So total of the current is 50,000 plus 75,000, and we get the total liability as $1,25,000. Okay, so this will be my total of the liability. Okay, then let's go to the equity side. Do we have any information on equity? Yes, we had stockholders equity 1,55,500 unchanged. So 1,55,500, 1,55,500. This is my equity, or this will be my total of equity also. Okay, so we got a total of liability and we got a total of equity. So let's calculate the total of liability and equity, which means $1,25,000 plus $1,55,000. So we get a balance of 2,80,500, which is same. So the balance sheet is balanced, and that's it. So ladies and gentlemen, our objective was actually to bring corrections, to bring adjustments. 1, 2, 3, 4, 5 informations were given to us. So based on these informations, we calculated that, okay, which accounts can get affected, can get adjusted. And we came to know that the accounts of cash, the accounts of inventory, and accounts of account receivable will be adjusted actually. Okay, these are the adjusted values. Then the adjusted values were shifted to the balance sheet along with other information which remained unchanged, okay, in the numerical. So we shifted both types of information here, and we prepared a full-fledged balance sheet with a, what you can say, with a more legalized way of presenting it. Okay, like I would show you the presentation of the account receivable. Let's see the presentation of the equipment actually here, which was not presented as we have presented now. Previously it was just the net values were given here. So this was our exercise 5-6. Thank you very much, ladies and gentlemen. Stay safe.